Today we discuss the right of offset, which can bite you in the butt if you don't know what it is. Scott Terrio is here to discuss it, starting right now.
This is Debt Free in 30. Here's your host, Doug Hoyes.
Scott, welcome back. This
Thank you.
is the month of November, I believe, if I'm not mistaken. And
It is.
You and I both have whatever's going around these days, so we're gonna see if our voices hold out for the entire episode. So, the question of the day: what is the right of offset? And we're going to talk about why we're discussing this. And the main reason we're discussing this is it comes up like every single day. So that's why this is the topic. So, Scott, first question: what is the right of offset?
Yeah, it does come up every single day. In fact, it comes up almost every time we meet a new client. Because, this is something that we make sure about that they are covered on as well, because most people don't know this. The right of offset is a sneaky little rule in the Bank Act. The Bank Act is the legislation, the federal legislation that covers chartered banks in this country. And basically the right of offset says the bank has a right to offset any loss on account A with any funds that you might have on deposit in account B.
So give me an example then. Give me an example of how that would work.
You owe $500 on your credit card with ABC Bank. You're late on a payment or two, and you also have $500 deposit on ABC Bank, so they can take that $500 anytime they want if you're delinquent on payments to offset that loss. Yeah,
and I don't know what the law says is because I've never read the Bank Act or anything like that. But I think all you got to do is think about it practically. If I had a $20 bill sitting on my desk here and I owed you $20 and you and I were both sitting, across the desk from each other, you'd go, well, you owe me $20. There's $20 sitting there. I'm going to take it. Like
I use a different scenario or a different analysis with people. I say, if you owed Tony Soprano $10,000 and you left $1,000 rolled up in a wad in Tony Soprano's truck, would you ever see it again? Not trying to compare a major chartered Canadian bank to a notorious Jersey mobster, but that's pretty much exactly what it says is, look, if you're going to give it to them and you owe them and they can't get you to pay, they're going to keep it.
Yep, it's as simple as that. So
it's exactly as simple as that. So people have a very hard time absorbing this, by the way. Like, this is a 5-minute discussion with a client, right? And typically because they've been banking with that bank forever, like if a client presents with 3 or 4 banks, I always say, okay, and after asking them their list of debts, and I say, so who do you bank with? And inevitably, they bank with at least one of those banks, and they've probably been with that bank since they were 14. So now you run into, okay, now what do I do?
Yeah, and you're right. We Canadians don't switch banks. We've all been with the same bank since we were kids. So, okay, so let's start the lightning round here and go through some of the technical stuff, and then we'll hit the practical advice. So
yes, no answers.
Exactly. So before the bank exercises their right of offset that you've just described, do they have to let you know?
No, they do not.
Do they have to get your permission?
They already have, by virtue of whatever you signed when you were 14 or 21 or whatever. Banks are covered legally 10 ways to Sunday. Okay. And also banks don't do anything they're not allowed to do. Like, they might do evil stuff, but they're allowed to do it.
Yeah, you're right. And you're right. When you go and get a loan at the bank, when you get a credit card, any kind of credit facility, there's always these, 50 pages you got to sign. And one of the things in there says, hey, look, if you don't pay us and there's money sitting in your bank account, we can take it.
Yeah.
And again, I think it's common sense. And, back to either your Tony Soprano example or my example of $20 is sitting on the desk there, someone's going to take it. That's just the way it is. So does the bank have to leave a certain amount of money in your account then? I mean, the money's in my account to pay my rent next week, and the bank exercises their right of offset. Are they allowed to do that, or do they have to leave me enough to cover my basic living expenses?
No, they can take everything out of it if it's necessary to cover the deficit. This almost sounds like a Reddit question, because I'm sure if you go on to Reddit and ask that question, there'll be 15 people who say, oh, no, they can only take 20% completely made up out of the air. The bank can drain your account if draining your account offsets the loss.
Yeah, and that 20% number you mentioned is actually in the Wages Act, and that is for a wage garnishment.
Yeah, different law.
Totally different law, though. And you're right. People get confused because, I heard this one thing over here somewhere. And if you owe money on a credit card and the bank takes you to court and sues you to garnish your wages, under the Ontario Wages Act, the maximum garnishment they're allowed to get is 20%. But that does not mean the maximum they can offset from your account when the money's sitting there is 20%. So if I've got $2,000 in my bank account for my rent tomorrow and the bank takes my $2,000 today, so my rent payment bounces tomorrow, not only is my rent going to bounce, but I'm also going to get dinged with an NSF fee because the bank took the money out of my account, right?
Exactly.
So
and we talk to people about this, right? So, if someone calls us and we have our consult with them and they're eager to go there, okay, I got to sign, I'm going to do this proposal, I got to get this started, let's start this soon. The first thing we ask them who they're banking with, because inevitably that will be the limiting factor as to when we can sign. They can get us the documents we need, we can get the papers ready within a couple of business days. It's not very complicated, but changing your bank and changing your payroll deposits and moving around all your bill payments and, trying to time that period of when's my rent. All of these things we work with people on, and it's time consuming, but it's necessary. And we insist on it because I don't want you losing money because, I neglected to tell you about the rule of offset, or you didn't listen to me and you went and left the money in there.
Yeah. And we're going to go through the practical things you can do. So does the bank give you any warning? Are there collection letters, anything, or can they just take my money with no warning? How does it work in real life?
They don't give you warning with specifically to the right of offset or what they can and are going to do. They give you warning by your statements. And so they figure if you're not paying attention to your statement and you got two statements and they both said you were overdue and now your payment is whatever by this date, and the wording in the statements starts to escalate and get a little more aggressive, that's where they're letting you know. I could imagine that they're probably working on or do maybe texts now and things like that, but I certainly haven't heard of that kind of a specific warning. They're pretty much saying, you owe us this much, you haven't paid us for 2 months, so pay us. They're not saying we're going to clean out your bank account, but they already have a right to do that. So I don't know of any, I can never think of a circumstance, where they were specifically warned about a right of offset. Yeah.
And if I was a bank and I wanted to exercise the right of offset because there's cash sitting in your bank account.
Would you warn me to take it out?
I'm not going to warn you. I'm going to take it.
Well, and this is the other thing we tell clients is that, not only change banks and change your next payroll deposit, but clean your account out, right? Because I've had people who, told me later, you said clean my account out, but I didn't. I wanted to leave some in there and I'm like, well, they took it, like it's gone. I told you to take it out. So you have to take out what's in there, because if it's in there, they'll take it. Like the bank is not thinking anything else, but as soon as they get notice that there's a proposal or bankruptcy, they're going to go try and offset that loss and they're going to take your funds. So it is also very important to clean the account out of any funds that are in there now.
Yeah, which is what we're here to talk about. So What about the situation where I owe money to the bank? I have a joint account with my wife. So can the bank exercise their right of offset and take money out of the joint account that I have with my wife?
Indeed, they can. The bank sees no separation. Okay. So if an account has two names on it, all it is an account for which I can offset loss with either name, even if it's cross. Because a joint account is a joint account. It's not a split joint account. Joint debt is joint debt, and so is joint cash. Essentially, from a bank standpoint, and there will also be legal wording on page 52 of the agreement about that. And so again, banks don't do anything they're not supposed to do. Banks are rule followers, but the thing is, they write the rules. So
well,
it kind of helps them. But yes, they can do that. They can take from what is essentially your wife's funds if you're joint on that account. So if you took, Doug's money out of that account and they went in and saw your wife's money, well, they don't see the difference. All they see is funds that they can offset with because it's a joint account.
Right. It's all the same bucket. It's all in there. And
yeah. And like we have instances where, people are joint with their dad or their uncle or their brother. Right. And so we ask all these questions in a diagnostic way and to make sure that, okay, first of all, I'm going to explain the rule of offset to you, but I'm also going to find out who else it's going to impact. And you may have to have some awkward conversations with those people, but if everyone wants to save their money, then that's got to be done.
Yeah. And a joint account does not mean 50-50. It means 100%, 100%.
Yeah.
That's, again, people don't quite grasp that. But
joint sort of works the opposite with debt as it does with assets, right?
Yeah. I understand if you get divorced, then the house gets split 50-50. But the money that's sitting in your bank account it's just cash sitting there. And so the bank has no way to know who it came from. They're just going to take what's there. So that's the downside to a joint account. So, okay, we're talking about banks here. Mm-hmm. What about other creditors? So what if, for example, I owe money to CRA, which a significant number of people do? What can they do? Do they have any kind of right of offset?
Yeah, so CRA has very wide powers, above and beyond what the banks have. CRA has a kind of offset in the sense that they can, if you owe them money and you have a refund coming, they'll offset by deducting the amount you owe from the refund. So you just won't get the refund because their CRA is paying themselves using your refund, and now you're clear. Okay, fine. That happens to a lot of people. Most people don't really mind it because I guess they figure, well, I owed them anyway. And if I took 2 years to pay them, it'd be twice as much. So yes, CRA has offset if there's something to offset against. In other words, if you're owed something from them, then they'll just go ahead and deduct it from what they send out to what you otherwise would have gotten in full in some benefit or tax refund.
Yeah, obviously you don't have a bank account with CRA, but if you're expecting a tax refund or the climate action incentive payment or an HST credit, then they'll say, oh yeah, you owe us money. We're not going to send you that money until this is
they'll do that with student loans as well, because the CRA is effectively the collection arm of student loans. So if you owe on a student loan and you don't pay it and you're behind, delinquent to whatever extent, CRA can take your income tax refunds, which you think, well, that doesn't relate to my student loan. Well, it's all from the same pot. And they can withhold refunds or HST credits or whatever and apply those against your student loans that you're delinquent on or that you owe.
So the bottom line is, if you owe money to a bank or CRA or somebody and there is an asset that they can glom onto, they're going to do it. Mm-hmm. That's what you have to expect.
Yeah, absolutely.
Okay, so that's kind of the framework to all this.
And none of these things, whether it's banks exercising the right of offset or CRA, require court action. Like even the banks, they don't send their lawyer that's on retainer to court to get a court order to take your funds. They take your funds because it's in their bank. So that's important to know too, is because some people ask, like, is there a period? Like, do I have 30 days, 60 days? No, there's none of that. Like to garnish your wages, banks and private creditors have to go to court. But the offset rule doesn't exist because the money's in their institution.
Right. So if Bank A wants to take money out of my account at Bank B, okay, yeah, then they need to go to court if I haven't given them authority.
And we get asked that a lot, right? People have two banks and I say, okay, well, use this one because that one you don't owe them any money. And they say, well, but the first bank's going to take from the other one, aren't they? No, they can't take from other than their institution, right?
Yeah, unless they have a court order.
They have a court order.
So what we are, or you've given them permission to. I mean, I could have my car loan coming out of a bank that's different from where the car loan
for sure.
is.
Yeah,
but
that happens.
Again, I'm giving them permission to do it. So what we're talking about is owing money to the same bank where you have money. Okay, so let's hit the practical advice thing then. We've kind of touched on it a bit here. So, okay, what's the practical advice? What do you tell someone? You're having this conversation with our clients at least 2 or 3 times every single day. What is it you're telling people?
So who do you bank with? They tell me who they bank with. I say, okay, maybe I don't raise the offset issue right at that moment, but I keep in the back of my mind a few minutes later, depending how the conversation is going. And then we say, that we tell them about the rule that we've just explained and how it works. There's usually a pause and they say, really? Like, are you sure? We're like, yeah, I'm sure. The most important thing is the bank will only exercise the right of offset if you're behind on payments, though. Like, we have people who come to us having to file proposals and bankruptcies who've never missed a payment on their credit cards. No bank is taking money from them. But once we issue the notice of the bankruptcy or the proposal, which is within a couple of days electronically, well, the bank's going to look you up, right? So as soon as they see that Scott Terrio filed a proposal, they're going to look me up on their system. They're going to see all the accounts I have with them. They're going to realize they're going to take a loss on the proposal or bankruptcy, and then they're going to take any funds that are in any accounts that I have with them. So clients ask us, they don't specifically ask us about right of offset. It comes up, we explain it, and then we tell them exactly what they have to do and roughly the timeframes involved in order to get it done.
So, okay, so the person comes in and they say, yeah, I got a big credit card with Bank ABC, and that's where I bank. I've been banking there since I was 14. That's where my paycheck gets deposited. So you're telling them specifically what?
So you got to get yourself a new bank, because sometimes they'll say, well, how about a different account? No, that's no good. Changing accounts within a bank is not going to help you, because the bank's just going to find you out. And if you have money in there, they'll take that from that account instead. So you get a new bank, you get your pre-authorized payment form from your new bank to your employer as soon as possible, because payrolls have cutoffs, usually a week. So if you're looking to file a proposal, you got collectors on you and I don't know, a wage garnishee or whatever, again, we're going to be, we can file it as fast as you can get your next paycheck safely deposited into your new bank. And we won't do it until then, because we don't want to risk funds being withdrawn. That's typically the conversation that we have with people. And
there is two keys to that: a new bank account at a new bank. And that new bank has to be a bank where you don't owe money, or else it kind of defeats the purpose. The only exception to that we see would be, I've got my car loan at a bank, and that's the only debt I have with them, and I'm going to continue to pay my car loan even when I do my proposal, because it's a secured debt. I can continue to pay it. So, okay, in that case, that would probably be a good bank to open the new account at, because you've already got a relationship with them and you're gonna keep paying them.
Yeah, that kind of advice we would give them. We would also make sure that if we're talking about banks that are owned by other banks, you probably want to stay out of those too. Technically, maybe they're legally separate, but like TD and MBNA or CIBC and PC, Tangerine and Scotia, right? Those aren't totally arm's length. So if you have a bunch of debt with Scotia and you say, well, okay, I'll get a Tangerine account. I'm like, no, don't do that, because that's the difference between 99% sure and 100. And I'd rather go with 100, because if you lose a $2,000 paycheck, your rent is not going to get paid.
Yeah, and everyone's got a problem. And I agree with that advice. I can't recall a situation in the last year or two where the bank that owns the other bank has taken money out of the other bank, but why would you take the risk?
Yeah, it's just, to me, and especially in times where we just came off 2 years of the courts being closed, banks couldn't collect money from anybody, and now they're going after people aggressively. Somebody in the bank's going to figure out, maybe just cross-check when somebody does a proposal that, there's nothing in like TD and MBNA and just get Tangerine, Scotia, whatever. You don't want to be the person they figure that out on, right?
Yep. Yeah, Simply would be another one that I believe is related to CIBC. So yeah, and when we're telling people, strongly suggesting that they open a new bank account, I always say, look, if you never go into a branch, then why not pick one of these banks that has no service charges, because they're virtual, like, Simply, Tangerine, PC, there's a few others. But if it's related to a bank that you deal with, then I would scratch them off the list, pick someone else. You also want to make sure it's a bank that you didn't have dealings with in the past. So, I did have this credit card there 5 years ago, and they haven't contacted me for 3 years. I assume they've written it off. Okay, I agree. If it's that old, under the Ontario Limitations Act, they can't take you to court and sue you, but that doesn't mean if you put money into their bank, they can't just take it. So one of the things you and I do with every single client we meet with is go through the list of everybody they owe money to, And we often suggest, hey, let's run a credit check on you. You can do it yourself, but run the credit report, give us a copy so we can go through and make sure that we aren't missing anybody at all. And that way you can pick a bank that's appropriate. And when we're suggesting a bank to go to, number one, it's got to be a bank where you don't owe any money. But the second thing I say is, well, if you physically go into a branch, then I guess you want to pick a branch that's near where you live or near where you work.
Yeah.
Other than that, would you agree with me that all the banks are the same?
Yeah. They used to be different. I tell people this, like in the 90s, the big banks kind of had personalities. Like TD was the open for business and retail friendly and longer hours and stuff. Because I think with Charles Bailey ran it at the time, and he was from that background. And I don't know, they all had their thing, sort of, and they don't now. I mean, they've just made it all vanilla. I tell people, choosing a bank is like choosing a bag of wheat. They're commodities at this point. I do tell them about the online versions, though, because you often save hundreds on fees in a year. So, anybody like me who hasn't been to a bank branch for, I don't know how many years, like I'm not paying fees so that I can keep a brick and mortar establishment in every little tiny town in Ontario on the four corners of downtown. So I give them that option. And if they knew about it, fine, great. If not, well, okay, they can make your decision yourself. It's up to you.
Yeah, I agree. The virtual banks have no fees. So that sounds like a good deal to me. The reason you might pick a physical branch bank, a bricks and mortar bank, is, well, I have to go in there because, I'm constantly doing transactions. I'm sending wire transfers to send money to my family. I'm always
if you're self-employed, a lot of self-employed people have to drop off checks and deposits and stuff, even if you're small self-employed, right? So I would say don't cut off your avenue by which you got personal, because they often have a business desk, right?
Right.
And when you go in, you don't have to line up. You just go to the right, and they know you.
Well,
that kind of thing, yeah. But I think every other average person, unless you go physically into a bank for something,
there's no really much need. Well, and you mentioned checks, and 3 or 4 years ago, lots of people got paid by check. Today, virtually everyone gets paid electronically. So if you're getting paid electronically, doesn't matter. But if you get paid by check, maybe because you work for a small organization, maybe you work in a restaurant or something, and that's how they do it, then if you open a new bank account at a new bank, you're a new customer. Almost for sure they will be putting a hold on your checks. Yeah. And that hold, when you deposit it, could be 10 days, particularly if you're depositing it at the machine or with the picture on your phone. Payment. Yeah, so if you get paid by physical check, that might be a reason to use a physical bank. And if you can use the same bank that your employer banks at, even better, because then you can walk into the branch with the check, go right to the teller and say, hey, I know I'm a new customer. I know you got to put a 10-day hold on it, but can you clear it for me right away?
Yeah, and I'm not sure if I think that hold applies if you take a picture of your check and do deposit it online. I think the hold still applies.
Yep.
Maybe somebody out there knows better than I do. If so, then comment on here and enlighten us. But I think it's the same.
Yeah, which is why, if I physically go into the branch and I smile at the teller and say, hey, look, I know I'm a new customer, but
I need a break.
Can you help me out? And usually they'll say, well, I tell you what I can do. I can clear $500 worth of the check or something. Okay, good. At least I've got some cash. Once you've been with the same bank for a couple of months, 3 months, whatever. Okay, then they take the holds off and you can do it, whatever. So
tell them your dog died. Just don't tell them that every time.
That's right. New excuse each time.
Mix it up.
And so what we're really saying here is you got to do some advanced planning here.
Yeah.
So
like you also have to sort out your bills, right? That's a big thing. And like all your bill payments forever have been coming out of your former bank. Oh, now, okay, you switched over. So sit down with a cup of tea or something stronger and make a list, right? And, maybe this is your chance to spread the payment dates out as well, to even your cash flow out a bit, right? Because you never sit down and do this. Well, now you're doing it because you've been forced to make a change in a bank. So it might be an opportunity to just review everything and when you make payments and stuff. Because this is a fresh start. Like a lot of people grumble a bit when I say you got to change your bank, but mostly they're like, yeah, you know what? Okay, it's time. It's time to do that. Let's do everything new, right?
Yep. Yeah, I totally agree with that. And my advice is print out your statement from last month, or just, if you do it online, whatever, take a look at your statement and go through each of the things. Oh yeah, I've got my car insurance. Okay, great. Got to get that switched over. I've got my paycheck so I can tell my employer, but I also get my child tax credits or something else from the government. Okay, I got to call Service Canada or wherever to get that switched over. Yeah. My pension, and that doesn't happen in 10 seconds. In theory, it does. You log in and put the new information in.
Yeah, some people's situations are pretty complicated with that stuff, or they're working, but they have pensions coming from the government, or they have money coming from abroad. And so we sit down and go, okay, here's the date before which we can't do anything so that your money is safe, right?
Yep.
And because the thing that takes the longest is the thing that we wait for to do the sign up, because we don't want to tip the hand to the creditors until you're absolutely certain that things have been changed over. I did have an example years ago, I've been doing this 13 years, it's probably a year or two after I started, of a little old lady whose grandson brought her in. She was like in her late 80s, and she had to change banks. Well, she had literally been with her bank for 7 decades, right?
Yeah.
And that was a big emotional event. Her face changed. And I was like, listen, I spent 20 minutes explaining the rule of offset. She could have just watched the podcast, I guess. Anyways, she went off. The son assured me, and I had emailed them they were getting a new bank. Great. So they got a new bank, and he gave me proof and all, because I was worried, right? And what she didn't do was take the money out of the old one. Life savings. Yeah. It was only $4,000, but it was gone.
Yep. Yeah, you got to do all the different steps. So
there's how much your bank loves you when it comes to right of offset, folks.
Yeah.
So.
And again, we're not here to trash the banks. That's the rules. That's how it works.
No, it's business.
That's business. So we're telling you how it works so that you can then you can govern yourself accordingly. So, okay. So to close the show, what is the wrap-up advice you want to give people? What are the final comments you want to say?
Well, so not everybody's calling us for insolvency. So, if don't bank with the bank that you have substantial debt with. I know that most people have their bank accounts and, at least a credit card or line of credit, and then credit cards and line of credit with other banks. But just think about your banking and think about worst case. If you ever end up owing a bunch of money, and if you are living paycheck to paycheck, you can't afford to have a paycheck taken ever. Okay. You can't, because you don't have savings. You don't have any cushion. And just keep in mind that the banks can do this stuff. And so if you're really worried about it, maybe you get a new bank completely and just start banking out of that bank, because the balance on your credit cards that you have with your other bank is it's not huge, but it's substantial enough that I can't pay it off every month. Maybe it's $3,000 or something, because you don't want them taking that $3,000 because you don't have any other avenue by which to, let's say, pay your rent if they take your rent. Okay, so just keep in mind the banks can do this, and if you're not quite at the stage where you're calling us, and I'll tell you to change banks, then at least know that maybe have a separate bank if you're kind of close to the edge with your debts. Because you don't know when the banks are going to throw a switch and do like a macro thing where they just go, okay, now this month we're going to start taking funds from everybody who owes us over what amount, right? Because, we're going into a tough time here. I just got finished saying that banks are being extraordinarily aggressive with collections these days. And so, it stands to reason that at some point, maybe that's one thing they do, right? Not with everybody, but if everybody who owes a certain amount, go in and take it.
Yeah, I agree. I think what does it cost you to have 2 separate bank accounts?
Yeah, it's just a matter of time.
Yeah, there's a bit of hassle involved,
and frankly, Doug, the feedback I get generally is like, because that's always the big negative point of the discussion is, oh shit, I got to change banks. Come on, right? Major administrative pain. And then we meet with them again soon after, because proposal voting is going on, and we're meeting with them, and they go, what, I went and got a whatever bank, and it wasn't too bad. Like I had to wait a few days for a card to come in the mail or something, but most people actually say it's not as bad as we make it out in our minds to think. Canadians have this mindset of anytime you call a large institution, it's going to be a pain, right?
Yeah, it's a fresh start. That's the way you've got to look at it. And by forcing you to go through all of your transactions last month, you go, wait a minute, I didn't realize I still had, my old gym membership coming out of my account. And I haven't been to the gym in 2 years, and I got 4 different streaming services, and I only watch one of them. And
it's a good exercise.
It's a good exercise to clean it out. So there you go. My advice is the same. I think it is prudent to have 2 bank accounts, your main one where you do everything, but a second one, perhaps at one of the virtual banks where there are no fees, that you keep a couple of bucks in. And then if there's any problems, you've already got something set up, you're ready to go. Obviously we're big believers in keeping your debt under control, so it's not a problem. But sometimes stuff happens. So this is the way to protect yourself.
Yeah, and along that lines of that last comment, if you bank with a bank where you have no debt, they're likely going to try and sell you debt. Okay. In fact, they probably already have, maybe several times. So just keep in mind that you might want to just do a firm no on that one, just because then that way you don't end up owing a small balance on something with that formerly safe bank that now you kind of don't have that safety net anymore, because if you owe them, they're going to offset it. Right. So I would be pretty disciplined with that bank as this is just my bank for transactions to come in and out of.
Yep. Yeah. And you got to make the decision for yourself. Do you allow your monthly bill payments to automatically take the payments out of your account, or do you actually send them the payment each month? I'm indifferent on that. There's, setting up automatic bill payments for your hydro and things like that means you never forget. So that's a good idea. But it also means that sometimes mistakes happen, something gets taken out that shouldn't have. So actually sending the payment may be a good way to keep an eye on that as well. So excellent. So there you go. That is the right of offset, something that Scott and I discuss with our clients every single day.
Maybe I'll dig up the legal wording of it just to see what it actually is.
There you go. Yeah,
it is there. I'm sure it's there.
Oh, it's there. And I think it doesn't matter what the legal wording is. If there's $20 sitting on the table, someone's going to take it. That's the way you got to look at it. Scott, thanks very much for being here.
Thanks again, Doug.
That is our show for today. I will put links in the show notes on YouTube to everything we've talked about. If you're watching on YouTube, please like, subscribe, notification buttons, all the things. We have a new podcast that comes out every Saturday morning. So if you're listening to the audio version, it's available on all podcasting platforms, Spotify, Apple Podcasts, and so on. There will be a new podcast next week. Until then, thanks for listening. I'm Doug Hoyes. That was Debt Free in 30.